Welcome back, everyone. Michael here with Offshore Citizen. Once again, continuing my big filming marathon today, trying to get a bunch of videos set up for you guys, queued up for the next little while. We're here in beautiful Bulgaria, filming out in the sun. It's excellent. And we're going to talk today about the subject of cryptocurrency, in particular Bitcoin, and will Bitcoin be the new money? So, we're discussing this partially because it's controversial, etc., partially because people are, talking about it a lot. And I think the important thing here is just to examine the thought process. One of the things that I like to do, and I spend a lot of time on this channel giving information, but actually I think the thought process behind the information is probably as important, if not more so, than the information itself, okay? And so, there's a lot of opinions out there. I think that opinions are generally not that useful. I think they're generally, just not very practical. And what's much more interesting is to find out people's reasoning behind their opinions, and then you can start to play and say, okay, well, are those assumptions accurate, etc. Okay, so this is kind of when I get into a conversation with somebody. I was having a conversation with someone this morning from New Zealand. We had a great conversation, and we started discussing this issue, and it's like, okay, well, let's step back behind that to see, okay, well, what are the objectives, what's the context, etc. So today, as we talk about Bitcoin in particular, and maybe at some point in time I'll bring on some friends who are really Bitcoin bulls and all this kind of stuff, and we can hash it out. I have some particular viewpoints around the nature of money that I feel Bitcoin doesn't really reflect a deep understanding of the nature of that money, okay? And so when we say money, what are we talking about here? Well, at a fundamental level, usually what we're saying is, hey, if Bitcoin will be the new money, we're saying it's going to replace, say, the US dollar, the euro, some sort of major currencies as a primary or significant means of exchange, okay? And obviously, the places where this has been most successful, maybe it's not obvious, maybe you don't know this, is countries like where in Africa, where their existing currency isn't very good, right? So you have a large unbanked population, you don't have a banking infrastructure, you're in a situation where it's like you can't trust your local government currency because they're going to inflate the hell out of it, et cetera, et cetera, et cetera. Okay? So maybe I'll start by giving what I think is kind of the bullish side of the whole thing. And by the way, this is not about Bitcoin as an investment. I'll get into that in a little bit. I think that, as I'm sitting here today, so it's the 30th of April, 2020, and Bitcoin just pumped like 20% in 24 hours. Great, if you're holding Bitcoin. I happen to have some of it, and I have somebody who day trades it for me as well, so that's even better. And so it's happy for me. I'm quite good about that. And I think in the near to mid-term, on a risk-reward basis, it's probably a relatively decent bet relative to what else there is in the market. Okay, meaning that the chances that it goes up, or the amount that it goes up, multiplied, or compared to the amount and probability that goes down during that period of time relative to what other things you could put your money into and the probabilities and amounts, it's probably decent, okay? There's, a lot of things are kind of unsure now, and I'll do some other videos on that. I've done some videos on stock investing, etc., during this kind of Corona crisis time. And what's the consequence? Well, the markets are up now, and, so some of those bets have been really good. But again, we'll leave that for another video. So let's talk about the bull case for Bitcoin. Specifically, we're not talking about crypto because I think that in the broad sense, there are some inevitable things here. There will inevitably be digital currency. There already basically is digital currency, right? Very, very few people in some parts of the world are using cash for a large percentage of the transactions. All the bank wires are digital. Your credit cards, things are digital. And our transactions, things, look at this. Bill payments are typically digital. The amount that I use cash for transactions, even, here in Bulgaria, where, okay, cash is much more common in certain parts of the world, is not massive, okay? And there's lots of reasons for this, right? It's purely more efficient to go and use, say, a credit card or debit card. And over time, you're just going to notice that the physical cash, the efficiency of physical cash, simply is not the same as the efficiency of digital currency. So digital currency will triumph. Okay, that's inevitable. That's not a question. And arguably, over a long enough time frame, a bunch of the currencies that exist today are going to go down. Now, does that justify saying that, you have people like Peter Schiff out there right now saying, oh, they're going to hyperinflate the currency? I did a video on hyperinflation, and you can go and watch it and look at, kind of the mechanics behind it, which most people aren't talking about, which again, I think is more important than the opinion about whether hyperinflation happens or not. It's understanding the mechanics, so then you can figure it out for yourself, right? So he's out there saying, this is a big problem, et cetera, et cetera. Currency's going to hyperinflate. They've got all these issues. Well, you're in a situation where you really, really need to pay attention to, this is not a primarily inflation-driven game. Certainly not in the, I would say, mid to near term, okay? So over that period of time, that is not the primary driver of what people are going to use. And part of the reason for that is you're not going to have extreme hyperinflation in a bunch of parts of the world, okay? There are, of course, always certain places where it can happen. We had it, arguably most recently, the most significant one was Venezuela, and, you can go and study why that is. Again, if you watch my video on hyperinflation, you can see, as I kind of explain the mechanics of what has to happen there with foreign debt, et cetera, or what almost always happens with respect to foreign debt and, local currency printing. So anyway, when you look at this, you say, okay, great, well, what is the bull case? The bull case to me has nothing to do, or nothing substantial to do with inflation. Why is that? Because even if you're in a situation where the stability or the value of Bitcoin, the price of Bitcoin is going up or remaining stable, and the value of currency is going down or remaining stable, right? You're going to tend to go and you spend currency because you think that the currency will be worth less tomorrow and the Bitcoin will be worth more tomorrow, right? So this is just like a basic, aside from the mechanics of it, all right, you're in a situation where you say, okay, it's hard to spend Bitcoin, right? There's very few places that accept Bitcoin as payment. Getting in and out of Bitcoin via exchanges or even Bitcoin local, etc., there's a lot of friction for that process at this stage, okay? So in the kind of short to mid-term, I would say you don't have a strong case on that side. More likely, people are going to be hoarding it than using it for transactions. But what is, I think, the strong case is the fact that they are cracking down on financial transactions. So I've recently started to express this view, and I believe this strongly, that as we move to a world where you have primarily a cashless society, and even if you could transact in cash, you're often transacting over long distances, so it's not practical to transact with cash. It should be a fundamental human right that people have the ability to have a bank account where they can deposit money, they can send and receive money without restriction, okay? Absolutely without restriction. That is my opinion. And why is that? Let's put it into context, first of all. Banks are impeding business rather than facilitating it. This is an enormous problem. This decreases the efficiency of the system broadly. People cannot start businesses and get ideas going and transact. They're wasting time having to open up new accounts, having to deal with bank compliance, having to submit documents, et cetera, et cetera, et cetera. And the reason for this is, it's very rational from the perspective of the banks. You don't have to have some sort of a conspiracy theory to make sense of it. Well, they've become responsible. The governments have fined them for the behavior of their users, right, of their customers. So if they're responsible, they're going to say, hey, look, if I could risk a multi-billion-dollar fine or multi-million-dollar fine by dealing with these customers and I'm getting $20 a month from them, or even if $100 a month, I'm getting $30 a wire transaction or whatever, on no planet is that justified. That is a very poor risk reward, right? So I'm never going to do that. Never. So what is the bank going to say? The bank's going to say, hey, I don't understand this business. I'm not sure about this, so I'm just going to close you down. Better to work with customers who we know them, we understand how they do business, and they're valuable to us, which is why I tell people if you want to get bank accounts open and maintain them, it's very useful to have a profitable relationship with the bank, right? When you have loans, when you have investments, when you have insurance policies, et cetera, the things that they make money off of, because they don't make money off of some of this other stuff very well, they're going to be more likely to keep you around. It's why being a private banking client is helpful, wealth management client, right? So all of these things are part of the equation. By the way, if you want some assistance, we can do some introductions to you to private bankers, wealth management people, etc. Let us know, and that certainly helps your case with a lot of banks. Okay, although there's minimum deposit requirements that exclude a bunch of people. So anyway, that being said, you're going to, by and large, have a much better banking experience if you go that way. And it's arguably increasingly important, even though, in my opinion, the value add of private banking and wealth management, the fees they charge relative to what they're giving you, is not especially good, right? But that's okay. That's a whole other conversation. All right. So because of this, because it's getting hard to transact, right now that hasn't really hit the mainstream. Okay. Right now, the people who are affected by this are, affiliate marketers, people who are doing businesses that are more modern, harder to understand. They're offering services. They open up an account and they start getting $50,000 a month, and the bank's like, whoa, we're not used to this. What's going on here? All this kind of stuff, right? Even though it's a fully legitimate business, even though, they're doing something that they're not doing criminal activity, they're not doing money laundering, they're not doing tax evasion, they're not doing any of that. Like, they're just doing normal business, right? And that's why these people come to us, right? Because they're like, hey, I'm trying to do normal business and I'm having trouble. I do want to, run my business as efficiently as I can. I want to have good banking. I want to have a good corporate setup. I want to protect myself. I want to, manage my tax situation properly. This is a problem if they can't be in a situation where they can, transact properly. Okay, so when or if, we'll see. But in my opinion, we're going to see more and more of a move towards more and more people being negatively affected by the financial system. The irony of this is that when they try to clamp down, and they're doing this with freedom of speech right now as well, by the way, if you're deplatforming, etc. Basically, this is deplatforming on the financial system. As they clamp down, what they do is they have more people rebel, right? It's kind of this counterintuitive thing, or counterintuitive that for some reason governments, etc. don't get, okay? Like, if you start kicking people out of banks, what are they going to do? They're not going to not live. They're not going to be in a situation where they're going to say, hey, well, I'm just going to stop doing business. It's like drug dealers, right? So, okay, you're going to make it harder for drug dealers to do business by eliminating cash, you think. Okay, great, perfect. What do you think is going to happen? Do you think they're magically going to stop selling drugs? No, they're going to find some other way to transact, right? And now that other way is probably going to be more efficient for them and going to build a whole system that's going to compete with your existing system, okay? So that argument, I think, is a very bullish argument for cryptocurrencies in general, a non-government controlled system, unless the government to do like, there's an economist, Warren Mosler, I don't know if you call him an economist, but he's the creator of modern money theory, or kind of the early proponent of it. Very, very smart guy. He's like, in his opinion, the central bank should provide a bank account to everybody. Deposit taking, sending and receiving should not be handled by banks. They should handle loans, they should handle, insurance, investments, whatever, all these other things, but not that, because that way the central bank cannot default, and since the central bank can't default, you don't have to worry about deposit insurance, right? Because people should not be in a situation where they have to try and analyze bank balance sheets to figure out whether the bank is solvent and they're going to lose their money, right? Very, very bad situation for people. And you could say, oh, well, the free market is supposed to decide. That's bullshit, because in reality, people don't have the expertise to make that kind of analysis. The information, bank balance sheets and financials, et cetera, are often kind of opaque. There's ways to manipulate those financials, et cetera, right? So the idea that a person could lose their money in a bank is really not very great, right? It's much better for your financial system if they can't lose it. And the way that they can't lose it is the source holding your money has an unlimited ability to print that money and therefore ensure that you get redeemed exactly what you put in. Now, the value of it in terms of the purchasing power could go down. That's a whole other conversation. But at least you know that you're getting your money, right? And so I'm of the belief that everybody should be given that as a basic human right, and there should be no interference with it. Absolutely none. Nobody should be able to have their account shut down. They shouldn't be able to get denied on an account. They shouldn't be able to have a transaction, incoming or outgoing, denied. And just so that we deal with this at the time, people will say, well, hang on, what about money laundering? What about tax evasion? What about terrorist financing? What about, proceeds of crime? You know what? You have a court system and a criminal justice system for a reason. If there's a problem with that, you should be able to prove it in court. You should be able to do a criminal investigation, and you should be able to prove it in court and deal with it accordingly. And what they're doing, essentially, at this point in time, through the use of platforms, through the use of corporate platforms in this particular case, banks in the case of the financial system, and things like Facebook, Twitter, YouTube, etc., when it comes to freedom of speech, is they're circumventing the laws by doing this deplatforming. They're saying, hey, we're not preventing you from, going and transacting. You just can't transact at this bank. Never mind the fact that if you can't transact at a bank, you simply can't transact in the modern world, right? Same thing with freedom of speech. Hey, look, if you can't speak on one of these major platforms, you've essentially lost your voice. So it's this tricky, backhanded way of getting around some of the rules. And whether that's intentional or not, it is something that is happening, okay? And as that happens more and more, I believe the pressure for people to look at an alternative financial system is going to be greater and greater. And so that, where do you naturally go? Arguably, Bitcoin is the main place to go at this point in time as the alternative. You're not going to go to another currency typically, right? You're not going to transact in gold. It doesn't matter that, maybe you can store up all this gold, but nobody's accepting gold for payment, and they're not going to accept gold for payment. Physical gold is, it's just not going to get transferred, right? So cryptocurrency, and in particular Bitcoin, has a strong bull case in that scenario. It has got the adoption, it's got the network effect. So what's the problem there? Well, in my opinion, you have fundamentally three problems going on here, okay? The first is it's deflationary, right? Just what I said before. You're in a situation where if the value of your Bitcoin is going to be worth more in the future, if you believe it will be, then you're going to spend fiat and save Bitcoin. That is going to be what you will do, okay? When you do that, what is the consequence of that decision? See, people think, oh, okay, well, no big deal. It is a big deal because when there isn't a demand for people to spend Bitcoin, there isn't a demand, there's no reason for businesses to accept Bitcoin. If you can't accept Bitcoin, then if nobody's accepting Bitcoin, then you can't spend it anyway, and then you're in a situation where it's not an alternative, right? For a system to work, it needs to be widely acceptable, right? Very, very important. It needs to be widely acceptable, and you need to have relative price stability. So let's go to the price stability argument, right? Bitcoin right now has high volatility. Now, the counter argument is you say, well, as the market cap grows over time, as we see, we're having a halving coming up in May. So, okay, as the halving happens, and then the next one in whatever it is, 2023 or something. I guess it's 4 years from now, right? So 2024. Anyway, as this happens, we believe that price stability is going to increase. And certainly if you were to look from, today to, 8 years ago, certainly price is much more stable today than it was back then. Okay, so there is a fair argument that you can make along the lines that price will stabilize more. But why is price stability so important? Let's just talk about this for the moment. Well, the reason price stability is so important at this stage is because of the fact that I am never going to accept payment and hold something if I do not know if I can make my payroll at the end of the month, right? It could be, I might believe in a long-term case for Bitcoin, right? I might say, hey, look, I think Bitcoin's going 5x in the next 2 years, okay? That's a fair argument. You could say that. But if I have to pay my staff at the end of the month and if my value could drop by 20 or 30% in that period of time, it could drop by more than that, 50 or 60% potentially, then why would I hold this? It's too risky, right? So I want a stable asset. So that's a bit of a problem, right? We have these different reasons why I think there's a problem with Bitcoin becoming the main money. So the first thing is, like I said, the deflationary property of it really works against it dramatically by reducing the adoption. It reduces the demand for people to pay in cryptocurrency, in Bitcoin in this particular case, okay? Second is the price stability one. Now, on the price stability side, I think it's a much stronger case that people would use a stable coin, right? They would use Tether, they would use Pax, they would use USDC, etc. These make much more sense to me as a means of transactional exchange. You could say, hey, look, we're going to start getting payment processing facilities on websites so you can pay in USDT, right? Or USDC or one of these others. And we know that the money that we're going to receive is going to be fair amount and so on and so forth. And you can gradually build up an infrastructure, and that infrastructure then has a network effect, and that becomes the thing that you use. Now, for people who are very concerned about hyperinflation and things like this, of course, you're not going to address that because you're still pegged to the US dollar. If you're also somebody who's a believer that you're in a situation where you're like, okay, I might have some loud noise as somebody is mowing the lawn here, so I hope that doesn't come through. But anyway, if you're in a situation where you say, hey, look, I'm looking at this and I'm saying, look, I'm a little bit concerned here about that something like Tether may be a fraud, right? They may not have enough money to back all these tethers. Very possible, right? Very, very possible. Again, it's an opaque situation. Paxo and USDC, much better, right? They're audited and so on and so forth. But you're also concerned that the government clampdowns may affect those. So, do you really gain? I mean, it depends on how freely available the exchange is, how much people can transfer this around, etc. But hypothetically, you could have some concerns about the stability of Tether, and I would not blame you about the stability of Tether, even though Tether is kind of a logical place to go. Okay, so that's the next thing. It's like fractional reserve banking, maybe on steroids. I don't know. Anyway, so That's argument number 2, right? Argument number 1 is deflationary, and the effect that has on not building up an infrastructure because it needs to be widely accepted. Number 2 is you're in a situation, well, actually, we're going to get into so this is kind of the third part of it. But anyway, number 2 is the price stability. And so all these factor in to the fact that places are not accepting Bitcoin. And it's related to kind of the third concern of why they won't accept Bitcoin, which is transaction speed, okay? Transaction speed, okay, they brought in Lightning Network, they haven't had a lot of success with it, etc. But transaction speed is super important, super important. I can't go to a, Starbucks and say, hey, look, I want to pay with my crypto. Let me just wait for half an hour while the transaction goes through, especially when it's, very random. It needs to go through in like seconds. So in Hungary, they're bringing in this thing, it has to settle in like 4 seconds or something like that. Very, very fast, right? An alternative to Visa and MasterCard. Great, fantastic, we love it. So that's a big problem, right? That is an enormous problem. And then we can get into how, it's a fundamentally inefficient system in terms of the consumption of electricity, etc., and what are the long-term effects of that, and so on and so forth. So for those reasons, as well as kind of some related reasons that mostly extrapolate from that story, I am a believer that Bitcoin will not be the new money, okay? If you want to say that the case for Bitcoin short to midterm is good as a speculation, fair enough. But I think in the long run, Bitcoin simply does not have what it takes in order to be able to meet the criteria to be a medium of exchange, big picture. Now, to further that, let's go and examine the subject of actual money, okay? Because the idea that money emerged as a medium of exchange is a fallacy. It is a historical inaccuracy. It's something that a lot of people have thrown out there a lot. They say, we were trading these things. No. Money primarily emerged as a form of IOU, okay? If you look at the historical record, we have no solid evidence that it was ever predated being you're exchanging goods, okay, obviously you traded goods, but having some interchangeable thing, what we saw, and it makes a ton of sense if you start to extrapolate why. Maybe I'll do a video at some point in time for how the money system works and where it came from and why it is that it works that way. But it worked as an IOU, okay? So money is created, it comes into existence as credit, either credit from the central government, which then can be, or the central bank, which can then be leveraged up through private credit, or as simply private credit. So in a sense, when somebody comes to buy from me and I give them payment terms of 90 days, I'm essentially extending them credit. I'm essentially creating money out of nothing, which will then get canceled out. Just the same as with your credit card. And something similar happens with the government, which is where they go and they spend it, and then they're gonna take it back in the future in the form of taxes, okay? So that's kind of, this mechanism is very, very important, okay? It's important for the function of economies because if you end up in a situation where you get deflationary and people don't have money and the value of money has risen dramatically, it's hard to get out of that scenario, okay? So what you have is you have a lot of unemployed people, a lot of people who can be productive but have an inability to be productive in the system because there isn't money to pay them to be productive, okay? So in this situation, you need some way of creating this money. Now, right now, the way that we do it is we centralize that, and the government creates it in the form of stimulus, and they're, arguably not that efficient at it, right? So the idea of a decentralized money, where some sort of money could come into existence through private contracts, and there could be some sort of a private credit market, which could be monitored and things like this. This is a brilliant idea, fantastic idea. I think that in the long run, we will probably come to something like that, right? But in the meantime, you're missing some really key characteristics of the monetary system, of the system that we have today, that really undermines Bitcoin being an alternative currency. Another thing is, the fact that your credit card is super useful to you in being able to do recurring payments, in terms of being able to do chargebacks, in terms of being able to earn points, and so on and so forth. You won't get any of that, particularly with Bitcoin, right? And so you can say, okay, well, you can have a third-party intermediary enter in there, and they can do it, but then you lost most of the value of Bitcoin. So it's kind of this idea of like having your keys, etc. So anyway, all of that to say that I think when you go through and you examine this, and like I said, there are other people who have different opinions. We can, have a whole debate on it. I think it's fun to think about myself, but I think that the idea that it will be money is not there. And this is, I think, fundamentally problematic for the long-term prospects of Bitcoin. I think that what it means is that ultimately, in the long term, Bitcoin will get out-competed and it will become worth very close to zero. Probably never actually zero, because there will be the diehards behind it who, it's like collecting stamps, right? You're gonna have stamp collectors, but it will be not mainstream anymore because it's been replaced by something else that achieves what it does, more or less, and because it doesn't do the things that they say it does. So, the story, the narrative for a while was it was going to be an alternative form of money. So although I, just gave you this lengthy explanation, the truth is that most hardcore Bitcoin people that I talk to, most experts, do not actually believe that Bitcoin will be a form of money, a means of exchange long term. What they think is maybe it will be a store of value. So let's finally end with that, okay? Talk about why I think that is not true either. So certainly we didn't see it perform that way in the downturn of the market. We saw relative correlation to other asset classes, and I did a video explaining why that is and why it makes a ton of sense. But I think you need to understand that Bitcoin is a fundamentally speculative asset. So contrary to, you can look at, there's a theory called stock to flow, and they kind of show some numbers where it was an article published in 2019 where they kind of show some math that, they figure out, okay, based on this, there's this rough relationship, or actually quite a strong relationship, stock to flow. Now, I would say that's a little bit backwards, because what they had to do was essentially apply regression in reverse to fit the data. And that to me is a little bit disingenuous, right? I don't see that there's a direct correlation there. And you can look at some of, in that article, they went through and they priced gold, and they looked at the market cap based on the stock to flow, silver, market cap, palladium, and platinum. And you can just look at the performance in actual prices of those things over time, and you find that stock to flow is a questionable metric at best. Okay, so that all being said, anyway. So here's the thing. Why is it that the fallacy, I think, is some people like to believe and preach an idea that the basis of value is scarcity. We know 100% that this is not true. Okay, how do we know this? Well, there's a ton of things that are scarce that don't have value, right? I mean, any piece of artwork that your kid made has no value, right? It doesn't have value now. It doesn't have value 10 years or 20 years from now when you've thrown out most of those, and there's a real scarcity of paintings from your kid. Okay, so scarcity does not confer value. That is it's a poor narrative. It's an inaccurate worldview. Okay, demand combined with that scarcity goes and determines these things. Okay, so the question then becomes, what is it that sets that demand? Now, if you don't have a demand for transactions, okay, and like I said, I think I made a fairly strong argument that long term there will not be a demand for transactions for Bitcoin. Okay, it's very unlikely. There is a very slim chance that this crush in happens, in a period of time where there's enough adoption and people start to use it and things, and you can kind of build up. It's possible that case will happen. I think it will get out-competed, almost certainly. Like, any piece of technology is ripe for disruption based on technological advancement, and I just don't see that it has the technology backing. And the hardcore Bitcoin people will argue with me on this, about how, anyway, like I said, maybe I'll interview a friend of mine and we'll have a conversation about it at some point in time, but generally speaking, I think that's a flawed argument. So the question then becomes, well, what is it that this provides? Now, it does provide at this point in time a certain hedge against political uncertainty, right? There is that, because it's harder to seize your Bitcoin. Okay, fair enough. But mainly, people are holding it for speculative reasons. Okay, the vast majority of people holding and buying Bitcoin is speculation. I'm watching these YouTube videos where people are saying, hey, what's the alternative asset class that you should buy if you can't buy stocks, and you can't buy bonds, and you can't buy these other things? Maybe you can make an argument for gold. We'll do a video about that soon. But you make this argument for Bitcoin. And basically the argument is, hey, look, the upside is much, much higher relative to broad-based equities, based on broad-based bonds. And so Bitcoin, and like I said, there is an argument for that for sure in the near to midterm, right? I think, like I said, Bitcoin's up 20% today. I think that if you look at some of the projections saying that it could go to 50,000, it's possible it could go to 50,000. Will it go to 5 million? I don't think so. But and there's some arguments you can make to show why that's not going to be the case. But let's just say that it could go to 50,000. Okay, well, a 5x upside, let's say in 5 years, right? That's kind of a reasonable time frame to throw it over. could quite likely be sooner than that. Is the stock market like to go 5x in that time? No, very unlikely. Almost, pretty much like the likelihood you see Dow at 75,000 is virtually not going to happen, right? Virtually not going to happen. Let alone seeing it at 125,000 in 5 years, right? In that period of time. And you can just look at how long did it take for it to go to 10 to 20, from 20 to 30. Well, it hasn't even made it to 30 yet, right? So, and so on and so forth. So very, very unlikely. Bonds are obviously not going to pay you that. So the upside of Bitcoin makes it a reasonably decent speculation, okay? Now, the problem is, what you'll notice is that the rises and the upside have continually decreased. So I forget what it was. It was like the first time that you had a big Bitcoin pump, it was like 98 times or something like that. Then you went to, I don't remember what it was, like 70 times. Then the last time it went to 20 times. Well, it's probably not going to go 20 times again, so maybe it goes 5 times, right? So now you have a 5 times rise. Well, okay, 5 times is okay, but then what about the next one? Now if it's going to go 2.5 times, it's less compelling. And if it's going to go, 1.5 times, it's less compelling, and so on and so forth. If you have this continual problem where the amount that it's going to boost is going down lower and lower and lower, okay? And in that case, when the speculative value goes away, then why are all these people going to hold? If you had Bitcoin at $100,000, I would say you're probably really dumb to hold it. It was like at 20,000 in 2017, it was a bad hold. It was obviously it had gotten ahead of the market. It dropped down to 6,000, then down to 3,000. I think there was a fair argument that okay, it settled around and kind of apparently the market decided that it should have been around 6,000. Okay, great. Now we're on a little bit of an upward trend. Maybe it's going to continue on. Maybe we'll hit all-time highs over the next year or two. Okay, great, whatever. Well, if you pay attention to this and you say, hey, it's a speculative asset, and the speculation goes away, then people pull out, then where is the demand coming from? The demand is not coming from scarcity. Nobody holds it because it's scarce. They hold it because of the speculative or the utility value of it. And that's the difference between it and gold. Gold has a utility value. So the reason why gold keeps up with inflation is because people are always going to be willing to pay an inflation-adjusted amount to use it for jewelry, etc. So long as that is the case, that's forming like a baseline. Then on top of that, you have the speculative hedging that happens, and you get these spikes up in price, right? You saw when it went up to 1,800 in 2011, 2012, whatever that was. And okay, that's great. That's perfectly fine. But it's not ever going to go to, the price of money could go way down, right? So in that sense, but in terms of like on an inflation-adjusted exchangeability for real goods and services basis, it's not going to go 100x. It's just not. It's not even going to go 10x because you have a fundamental amount that people are willing, there's a real demand, and that real demand is setting the baseline price, and then you're getting some volatility around that based on uncertainty in the environment at any given point in time. Bitcoin doesn't have that, and that's a really, really big problem for Bitcoin long term. And by long term, I mean like, I don't know. It's hard to say, right? Is it 5 years? Is it 10 years? Is it 15 years? I don't think it'll make it to 30 years, right? But I can't say what that time frame is. I think, in the next few years, there's a high likelihood that we're going to see, another bull run with Bitcoin. Say, to give it, some sort of safety within the next 5 years, right? Over the next 5 years, holding Bitcoin is probably relatively safe, and you'll probably on balance win on that relationship, so long as that you can sell while it's high. Obviously you can hold forever and end up in a negative situation. I don't think that you're going to be too worried about it dropping to near zero in the very near term. It's possible. It is possible. There's some underlying economics to it, mining, that may shift some things. Obviously you can have some government intervention, but actually I think the government intervention is more likely to push it. So anyway, I'll do one more video in the future on Bitcoin, but for now, I think that's the thing that's worth understanding, is that it's probably never going to replace money. There will probably be some other digital money, probably something government issued, but there will probably be something private that will compete with it eventually. And Bitcoin is probably a reasonable speculation at this point in time. And in the very long term, it's probably not a very reasonable speculation. So the people who think, oh, hey, it's going to 5 million, I would say you're probably deluding yourself, almost certainly deluding yourself in that situation. You're probably going to see less pumps each time, and so, you're going to have to vary it relative to other things. So anyway, I hope that's helpful. write to me, give me your hate mail, tell me all the reasons that I'm wrong or the reasons that, you find it interesting. Tell me what it is you'd like to see videos on, subscribe to the channel, share this with all your Bitcoin loving friends so they can hate on it. And yeah, I hope that you have a great day. And check out our websites, obviously, if you want assistance with anything, offshorecapitalist.com, offshorecitizen.net. Check out some of our other videos. We got quite a few of them. I'm trying to put up lots more, trying to get some people out there. Really appreciate any support that you have, and I will look forward to seeing everyone on the next video.